Hello and welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, there's been a decent recovery in the market after a very weak start in the opening bell. Of course, we are still in the red territory, but we are at least off the day's low. If you look at the Nifty and Sensex at this point of time, they managed to recoup most of the losses earlier in the session, but still we are down about 0.2 to 0.3% on the benchmark indices. If you look at the broader market though, there has been a spectacular recovery there. They started off on a weak foot, but clearly the small and mid cap space have since moved into the green territory and are sitting pretty, around 0.3 to 0.4% higher. So the outperformance to the large cap space of the mid cap and the small cap, stocks continues even today. If you look at the global cues are still quite weak, and probably that explains the weakness that we are seeing in our headline indices. European markets were down with deep cuts because of the ongoing fears around recession. There is apparently going to be a summit, in the coming days there to basically understand and devise solution on how to tackle the gas crisis that has been brewing there in that continent. Today, we promised you that, we'll be bringing you some festival picks or stock picks that we believe would be bouncing this festival season. And I'll be joined later in the show, by my colleague from Moneycontrol Pro, Bharat Gianani, and we'll be talking about 5 stocks that we believe would be really in a hot streak this festive season. But before we hear from Bharat, I want to bring to your table 2 stocks that I would be really looking forward to over the next couple of months. The first stock from my table, and drum rolls, we don't have any, but the first stock is Aisha Motors. Now, Aisha Motors has been one of the best performing stock from the auto pack this year, along with Hero, probably Aisha and Hero and actually TVS Motor. Aisha probably has given the best returns as far as automobile stocks are concerned. Now, why Aisha Motors is because if you look at the Indian two-wheeler market at this point of time, they are in 2 different directions, right? The premium side of the market is doing really well. I mean, there the issue has not been, much around demand, but actually supply because of chip shortages that a lot of companies are facing. On the entry-level side, of course, we discussed it in the morning as well, that there is some sluggishness as far as demand is concerned. Now, given that premium two-wheeler demand has seen strong, premium two-wheeler segment has seen strong demand in the June quarter, one could really relatively expect that to continue into the festive period in Q2 and Q3. The company in itself is actually looking to refurbish its entire portfolio. They are expecting to launch a lot of upgrades as well as new models over the next 12 to 18 months. They have already launched 2 models recently, and the response to that so far has been quite decent. So you would expect that Aisha would try to capture the demand that will be coming in the festive period going ahead. Let's also not forget that this is the first festive period without COVID-19 restrictions. So companies across the board, not only in the two-wheeler space, but across the board are expecting a very strong season. Apart from that, if you look at the production side, where the most of the challenges were for Aisha Motors, the easing of the chip shortage issue has really been a tailwind for the company. Now the production has been ramped up, and they are expecting to be able to meet a lot of the pending orders or the pending demand that was out there for them to capture. So that will be my first stock, Aisha Motors, from the two-wheeler space. My next stock is actually one stock that has always been, among, valuation hawks, always been in the radar of valuation hawks out there, and this is Page Industries. Now, Page Industries surprised everybody with their Q4 as well as the Q1 earnings. Now, the context here was that because of higher raw material prices, because of higher cotton prices, everybody was expecting that Page Industries margins will take a hit, their volumes will take a hit, but lo and behold, in the March quarter as well as in the June quarter, the company's earnings were very resilient. In fact, in the June quarter, demand was so strong that they were able to beat a lot of the, they were able to beat market's estimate on many operating metrics. So clearly, at this point of time, given the healthy trend that we have seen in demand in Q1, It seems like we'll probably be able to continue that later in the festive period. Apart from that, of course, I spoke about the resilience in margin. That I think would continue with a lot of the raw material prices now softening in the past 2 to 3 months. You would expect that the margin resilience will continue, and with the high growth that is expected from the demand side, one would expect that the premium valuation that Page Industries has will be justified. Now, before we go to Bharat, let's quickly take a check on the market, and it seems like we'll probably be ending the day in the red territory as far as the Nifty is concerned. As far as the mid-cap space is concerned, there we are clearly seeing a bit more buying power coming in. Nifty mid-cap index is higher by about 0.5%, while the Nifty small-cap index is higher by about 0.7%. The India VIX, although has been down, it's down about 0.4%. So clearly, bears have not utilized this weakness in the market to add to their short positions. Clearly, they feel that probably the market is just not weak enough, or the sentiment right now is just not weak enough for them to make any sort of profit by shorting this market. So that is the market update. Now let's quickly move on to Bharat. Bharat, can you hear me?
Yeah.
Hi man, how are you? Thank you so much for joining us on the show today.
Thank you.
So Bharat, we were talking about festive picks when I was briefing you about the show, and you have 3 stocks that are on your radar that you are really excited about as far as the festive period is concerned. So you can take us through one by one, and probably if I have any question related to them, I'll probably bombard you with that.
Yeah. So hello to the viewers. So basically, 3 picks from our side in the consumption space. Going first is the Titan, the stock we like from the consumption side. So the positive points about Titan are first that it has been gaining market share through the localization strategy. So it has been introducing products as per local tastes and preferences. It has seen good traction in markets such as Andhra Pradesh, Tamil Nadu, Bihar, and Chhattisgarh. The second important point is the mandatory hallmarking regulations, which the government has brought out. Under these regulations, only the jewelry which is of high purity that will be certified will be allowed to be sold. So this will basically reduce the pricing differential between the organized and the unorganized segment, and it will benefit players like Titan. The third important point is that the company has been seeing very strong demand. As far as the festive season is concerned, they are expecting 15 to 20% growth on an overall basis. So that is another positive factor. Another important point is there is a huge scale up which is expected in the non-jewelry business. So the watches and the eyewears, both on network expansion as well as new product launches, particularly if you see smart watches, they have introduced a lot of products. So that will make these 2 segments, become bigger in the coming years. So that was about Titan.
Which is the next
stock? Second stock which we like in the consumption space is Metro Brands. The company has now in the last 2 years, there has been a disruption due to COVID-19, and there was hardly any people movement. But now, with the conditions normalizing, the company has witnessed strong demand in Q1. The revenues have grown by 63% above the pre-COVID levels. So that is the kind of the demand surge which is being seen. The company has a strong network expansion pipeline and aims to add about 40% new stores in the next 3 years. This will be across the brand formats that it has, that is Metro, Mochi, Walkway, and Crocs. The FitFlop brand, which the company introduced in India, which is a premium selling brand in collaboration with the UK company, has received a very strong response for the consumers. And the company is looking for more such tie-ups with international brands to scale up the business. Another point is that the company has been scaling up its digital presence. The online sales now contribute about 9% of the overall revenues. And the company is also launching premium products. So basically to improve the average selling price. Over the last 6 to 7 years, the ASPs have increased by a good amount. So that will continue. Our third pick from the consumption space would be Trent. Trent posted all-time high revenues in Q1 FY23. So both the flagship West Side brand, which is a premium brand, as well as the Zudio, which the company launched some time back in the value fashion category, both have seen a very good growth. The company has an aggressive store expansion plans for both the brands. Zudio, the value fashion format, has seen a good pickup, and the company is entering new cities. The Westside brand has a loyal customer base of about 7 million, and it is growing. The company is scaling up the digital business and in both the segments through the Tata Click app. Also recently, Tata Neo has launched a super app which will host products from the Trent stable. The company expects about a tenfold increase in the West Side customer base because of the Tata Neo app. So that is the kind of potential that they are expecting. The company has a strong balance sheet and a strong brand image. So these were the points for the stocks.
Well, Bharat, interesting to see that you have two retailers in your, in your basket there. Of course, when you talk about consumption and, in the current macroeconomic environment, you cannot not talk about inflation and not touch upon inflation. A lot of people have, when they argue against a retailer like this, they would always, some people like Avenue have already talked about it, how, high inflation is already starting to impact the amount of money that consumers are willing to spend out there. Do you think that that could something that could probably taper the enthusiasm around retailers like a Trent or a Metro Brands?
No, not really. I mean, the inflation, as you said, is there. But then, if we see, the first important point is that the penetration of the unorganized of the organized segment in the overall retail market is very less. So if we see in a segment like grocery, it is like in just mid single digits, 5 to 6%. Some companies have the value for money proposition, which is there. If you see DMart, DMart has a strong business model as well. So they have all the stores are like owned. So the rental savings that they accrue from the of not having a rented store, that is used to lower the discounts and give customers with the best discounts. So basically, players like Avenue Supermarts, in fact, have saw a very good increase in the revenues. And in an inflationary environment, when people are hunting for value for money brands, DMart clearly stand out. If you see other categories like apparel or jewelry, the share of organized segment is very less still. So it's like 30% for footwear, 30% for jewelry, and other apparel also it is like 30% or so. So basically, there is a huge runway for growth for the organized players. Even if we see the expansion commentaries for Q1 of the major players, which I talked about, like be it a Trent, be it Page, be it Titan, all have very huge expansion plans. So inflation is really not having so to say an impact on these retail players, and we expect the runway momentum to continue. In fact, in our Moneycontrol Pro note on the retail sector that was like released 2.5 months back, clearly addressing the issue of inflation. From that point, in fact, our 7 recommended picks in the retail space have given a return of 25% from that level as compared to an FE return of 12%. So I think really the inflation kind of does not have it might have some impact, but the runway for growth is very high, and so really it will not matter much.
Well, thank you, Bharat. I think that is great news as far as investors are concerned and as far as retail companies are concerned. And guys, if you have not already subscribed to Moneycontrol Pro, you are missing out on great insight like this from Bharat. So quickly subscribe to Moneycontrol Pro as soon as possible. Thank you, Bharat, for joining in. I'm sure that we will probably in 2.5 months, 3 months time, we will come back and see our report card whether both of us have done a great job or a decent job on this, on picking out the festival picks for this season.
Thank you.
Thank you. Moving on, guys, let's quickly take a quick check on the market. And if you look at the Sensex at this point of time, down about the Nifty down about 0.2%, but the top loser on the Nifty are interestingly auto names. Tata Motors is down 2.6%. No surprise given the concerns around the European economy, given that JLR has such a significant exposure to the European economy, you would expect that Tata Motors would probably be weak in trade. Bajaj Auto is down after that sale is a downgrade that came earlier in the morning. M&M is down 1.2%, Maruti down 1.2%, and Bharti Airtel, interestingly, is down 1% after a 1.8% equity deal that happened earlier in trade today. So very decent at this point of time. Big losers, big heavyweight names taking a knock. But if you look at the gainers on the index, it's clearly the cement pack. The Shree Cements and Ultratech Cements of the world have been dragging the index in one way, dragging it higher. Shree Cement is higher by about 6%, Ultratech Cement higher by almost 4.5%, and Adani Ports, surprise, is higher by about 3%. So clearly, not so great a day for auto pack, but cement pack is really standing out in today's session. With that, let's quickly take a check on the events and economic data points that you might want to keep an eye out on before tomorrow's session. And there is not much in terms of data apart from China's retail inflation data that will come out tomorrow morning. But the key thing tonight would be the speeches that two Fed members would be making. Fed members Brainard and Barr would be speaking later in the evening, and it will be very interesting to see what sort of commentary they give on the back of that services PMI data and of course the manufacturing PMI data, which basically signaled or reflected that the US economy is still doing quite well. And maybe they would also indicate, just like one of their colleagues indicated last night, that they would probably be in favor of another 75 basis point hike going ahead. So those will be the two events to watch out for. With that, it's a wrap on this show. And if you have any feedback, please post it in the comment section below. And of course, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, guys, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.